Hello everyone, myself Vaibhav. In today's session of Visual Jforex, we will be continuing to work with the indicator named Chande's Dynamic Momentum Index, which is shortened to CDMI. So now let us get started with the Visual Jforex board, which has been developed by the Dukascopy Bank SA. In the prior session, this setup has been completed so far, where we have this instrument subscription done with the default instrument defined as Euro USD. The position amount was set at 0. Then I got these CDMI blocks of the hourly time frame as well as 5 minutes to use it in conjunction with each other to define the size entry point for the trade. And to look at the price volatility, we are also relying on the get historical candles block along with the loop viewer, and to make sure that the immediate price action is also in our favor, we are also going to rely on this get historical candle. And to pinpoint the entry point, these 10-second candles will come handy. And to define certain conditions, we are also taking into consideration various calculations using this calculation expression block, and after that the buy side requirements have been defined. So these are if blocks and then the trade command buy. Now today it's the turn of the sell side, and we will start with that. And prior to that, I will explain to you the logic behind the execution of the sell trade when it will be happening. So now we go to the Jforex platform. This is the Euro USD chart on the hourly time frame where I have plotted the CDMI. And as you can see right now that the Euro USD is climbing quite rapidly. We have the CDMI value constant at 100, and it has traveled all the way from 0 to 100. And as you are aware, 50 is a decisive marker. Above 50 it is considered bullish, and below 50 it is considered bearish. And also along with that we have two other levels, the 30 and the 70 points. Above 70 it is considered overbought, and below 30 it is considered oversold. And that is the one condition which we are also going to use. And for the sell side, we are relying on the trend, and we need the CDMI value to drop below 50 from above 50 in last hour. And along with that, we will use the 5-minute charts to make a precise entry. So provided that the hourly conditions are in place, we will need the Euro USD or any instrument for that matter. It's a CDMI output value to dip below 70 from above 70. That will indicate that on the lower time frame, the underlying instrument is now going back after having spent time in the overbought territory. That means its prior buying momentum might be subsiding, and it might be the time to go for the fresh shorting opportunity. So that's what we are relying on. And whenever the output value for the CDMI drops below 70, the order will be placed. So I think this is a fairly straightforward and simple logic to understand, and its implementation is also fairly simple. All we have to do is compare these output values for the CDMI blocks, and using that we can define the conditions. So I will take a couple of if blocks. I think we are going to need 9 if statement, if I'm not wrong. So I will take 9 if blocks straight away, and along with that the open at market. Okay, and this is going to be sell order. These input parameters we will define later on. Now let us start with the CDMI output values. Here the requirement is that last hour's output value, that is out 13. Here we have the shift 1. So that means this is the output value for the CDMI for last hour. This should be below 50, which means first input less than second input. First input less than second input. All right. And after that, we turn our attention to the prior hour. There it should have been above 50. So earlier it was on the bullish side, then it changed the trajectory, and that's the point of interest for us. First input greater than second input. All right. And once these hourly conditions have been defined, we need to take into consideration the 5 minutes CDMI output. And here, as I said, as I explained to you the conditions on the chart, we want the 5-minute time frame CDMI values to start dipping below 70 from above 70. That means last 5 minutes output value, which is out 18, it should be below 70, whereas out 19, which is the penultimate 5-minute candles output value for CDMI, out 19, it should be above 70. First input greater than second input, and in this case we will need first input to be less than second input. So we have to take this and join it to the next block. Okay, and in this case the first input should be greater than second input. All right, then we turn our attention to the price volatility. We want the last 4 hours price volatility to be good enough, and it should be worthwhile to get involved for the trade. And trading is profitable only if there is enough of momentum in the market. In sideways market, where it is very difficult to make money. And to avoid sideways market, I am going to look at these calculation expression results. We have these predefined difference between the highest and the lowest of last 4 hours, and this calculation, the output should be greater than 20 pips, which we have defined here. In prior session, both of these calculation expressions were set up. So in this case, first input should be greater than second input, and similar thing we also need for the last 5-minute candle, where on the 5 minutes also there should be good enough for price momentum, and the high and the low difference should be more than at least 4 pips. So this one also needs to be defined, and first input greater than second input. Alright. So these 6 conditions have been defined, and I will arrange this block, and also we have to make sure that the setup is symmetrical. So this will be inverted image of the buy side. Okay, blocks in place. Now the last three conditions which are going to be dependent on last 5-minute candle closing value and the last two 10-second candles. So here we want last 5-minute candle, which is candle 22's closing value, to be less than its opening value. That is going to signify that there is a selling pressure immediately prior to the execution of the order, and it increases the probability of being on the profitable side. So we have to take that into consideration. Candle 22's close and its open closing value needs to be less than the opening value. And then we compare the candle 23rd and candle 24th closing value with the candle 22nd's closing value. So again, this should be the input in both these if blocks, and candle 23rd, which has a look back period of 1, its closing should be less than the candle 22nd candle close. First input less than second input, and here in this case first input greater than second input. And after that it is going to be the turn of open at market. Okay, now we have to define the input parameters for this open at market block, and these are going to be identical with the buy side block as well. Default instrument remain as it is. Trade amount I will change to 0.1 million. Slippage will be 2 pips. Stop loss is going to be 15 pips, and take profit 30 pips to make it 1:2, the risk reward ratio. And this is identical with the parameters which we had set for the buy command, as you can compare. So with that, we have completed the sell side and the whole of the algorithm as well. I will join this here and color code it to see whether the iteration flow is going through all the blocks or not. And yes, everything seems fine till the very end. So I hope you have been able to understand how you can design a simple algorithm using this indicator, and I hope you will also be trying this on your own, and then once you are done with it, you can run the testing on the historical tester and see whether it is profitable or not on the prior data. So with that, you will get the idea for its efficacy, and depending on that, you can decide to use it. So thank you all for joining in. We will be back with the next indicator block in next session. Till then, goodbye.